What is going on, everybody, and welcome on into the channel. So in today's video, we are diving into how to do due diligence on penny stocks to buy. Now, you see them everywhere, the videos. This penny stock is about to go moonbound, parabolic. This penny stock, buy this, it's going to 10x, it's going to do this. You see the videos, YouTube loves them. And when people are excited about making money, when the market's green, when everything's kind of working nice, when we got some short squeezes, they do really well. And those channels do very, very well, and the videos do the best out of any stock videos, really, when it comes to YouTube, and really, you see them all over the place. The problem is, do you know anything about the companies that these people are talking about? Other than maybe their due diligence, or maybe they pull up the website, maybe they talk about some trial, maybe they talk about some catalyst, maybe they talk about something, some short interest. Outside of whatever you're being told, are you actually doing your own research into any of these plays, any of these stocks, any of these companies? If not, this video is absolutely for you, because whether you take their information or not, always recommend, whether it's my video, whether it's somebody else, and you see somebody buying something or whatever, you understand that you can do the research, you can do the due diligence, and it's not that difficult to do. And that is going to put you miles above the crowd, and it's going to put you in a much better place, because when a stock makes a move down or up, you know exactly your plan, you know what you're looking for, and you know how to handle that. And I think 90% of people do not know what to do when a stock dips. And that's why you always see in the comments, and you always see on Discord groups, you always see on Twitter, on social media, why did it dip? Should I buy? Should I cut it? Should I sell? What's your PT? The question everyone asks, what's the PT? What's the PT? I don't want to see that ever. I really hate that. It's a terrible, terrible question to ask. If you're asking that question, you shouldn't be in the stock. But here, we're going to talk about how you can answer that question for yourself, and how you can do your own due diligence to find stocks, to set your own trading plans, and so you know what you own, and you can let the trades play out. So sorry for the long-winded intro. There will be a timestamps down below, so you can go to individual parts if you want to dive deeper, or go jump around, whatever you want to do. We will cover briefly how to find stocks to buy. We've talked about that many times. I have a playlist going over that. We've talked about it, but we'll briefly dive into that. How to determine your risk reward and fundamental analysis on these stocks. So all of them can tie in together, and there's a lot that goes down deep under fundamental analysis that we're going to talk about, and even the risk reward. So we'll cover all these things, and we'll cover all the parts that go into them. And of course, right, there's endless things you could do, but this is going to be a great baseline, a great place to start. And I would highly recommend you do these things when you're looking for that next penny stock to buy, because of course, these stocks, the way I see them, is most of them, you have to assume that most of them, or assume all of them are here to take your money. They're here to get you in. They're here to pump the stock up, and they are here to drop an offering on your face. And they are here to take that money and run. That is what they are here to do. That is what you have to assume. Do not get caught up in the story and this and that. If you do, more often than not, you're going to find yourself averaging down and buying in to some BS. Doesn't mean that there are not diamonds in the rough, and doesn't mean stocks can't run. It just means that you're going to put yourself in a better place, so you won't get caught bag holding, you won't get caught in offerings as much. It happens to all of us, right? And you at least will be someone looking to take profits, rather than someone holding for the next short squeeze 1,000,000% runner. In the process, you're down 50%. So we're about to dive right in. And on this channel, every single Saturday, what we do here is we dive in to currently the Webull small account challenge, whatever you want to call it, trading stocks to $100,000 challenge. Every Saturday, we recap what we bought, sold, the portfolio, how it's setting up, and at least what I'm allocated in. Penny stocks, whether it's options, large caps, we cover it all on this channel. So make sure you subscribe so you don't miss those videos. So how to find penny stocks to buy. The first place we are going to be looking is finviz.com. I mean, it's the best place to go. Here we are on finviz.com. I am going to go to the screener tab. Now guys, I'm going to run through this fairly quick, but I have more in-depth videos diving through how to find stocks to buy. The purpose of this is to do your due diligence. You find the stocks, or you get the stocks from somebody else, and you do your own due diligence before you ever enter the stock, so that you're not just randomly buying after somebody else and you're buying up 25% and they're dumping into you. You don't want to do that. Please, you don't want to do that. So here we are. We can go here. We can go to the market cap. We can sort of market cap, for example, on small caps. I'm going to be looking for stocks, let's say, that are small caps or less, under $2 billion market cap or less. That is what I'm looking at. And maybe my price point, I want to look at price points under $5. So I'm looking at these, cheaper stocks, and I want to go to float, for example, how many shares are available to trade. I want to go to under 100 million. That doesn't really narrow it down as much as I kind of want it to, but it narrows it down a little bit. Maybe at that point, I want to go to NASDAQ stocks only, and maybe at that point, I want to go to US stocks only, and I start to narrow things down. From here, I can go to the charts, and I like to look at charts first, but you can go through the overview and go down the list. I personally like to go to the chart page, and I like to just scroll through charts that look appetizing, that look nice to me. And if a chart catches my eye, I take a stab and I dive deeper into it. I add it to my list, and we can go ahead with the next parts of the process. The next way to find stocks is social media. So I'll use, for example, Twitter. Let's say you follow somebody on Twitter. For example, maybe you want to follow me. I don't really care if you follow me or not, but here's an example of my Twitter page. I don't say I'm buying this, I'm buying that. I just point out stuff that I'm noticing. SPY, I talk about, I recommend videos that I have. If I put one up, I talk about, what we're noticing and how stuff's working out, speculations and, whatever. It is what it is. But let's say you have a trader on, social media that you follow who, has the Lambo in their picture and they're all looking good and you want to follow them and you want to make money like them. And they say, I'm swinging this stock with 1 million shares. And you're like, oh, that's a lot. I got to get in. Well, start there. Add it to your list. Don't just immediately buy it. Please don't do that. Please, please, please do not just do that. Please. I'm telling you right now, it will save you a lot of money. And if I only knew that, a couple years ago, it would have saved me a lot of money and a lot of time starting out. But it's a great place to curate a watch list. You can see people with ideas and you can get, you can take some stuff away from those ideas and it may be helpful to you if you like the chart, you like the idea. Maybe they toss in, an insider buy here, or they toss in, a screenshot of this. It could be helpful. Back to FinViz, the next place I would recommend is a trading journal or list. So let's say you've been around for a little bit and you have your own lists and you have your own trading journals. That's a great place to start. You have a lot of stocks you've already traded. You know how they trade. You know why they moved, this and that, and you've logged it. It's a great place to start. I have a video on the channel going over trading journals, okay? Type it in my channel search bar on my channel homepage. Go to the search and just type in trading journal. It will pop up. And that's where I always would recommend you start as you start trading, logging your trades, logging your stocks, and building out your own watch list. Back to my platform on the left-hand side, I have a bunch of watch lists. For example, EV stocks. I have green energy stocks. I have some 5G stocks. I have some sports betting stocks. I have been building out my lists, and you can do it across a spreadsheet or on your platform, wherever. Doesn't really matter, but that's a great place to start as well. Now that we have a list of stocks that have caught our eyes, either you like the chart, you traded it before, you're noticing a theme coming up, you're noticing, let's say, sports betting stocks are going crazy, and you found a couple stocks that haven't run yet, and you're like, hey, let me take a look deeper into these, and see if I like them. Now we can dive deeper into doing the DD, the dirty work, the due diligence that no one wants to do. First up, understand the market conditions. You need to understand the market conditions. Right now, we're looking at IWM, so this is going to model small caps, the Russell 2000 ETF. This is showing for the past 8 months, we have been consolidating. We really have just 8, 9, 10 months, whatever it's been. We have been consolidating. So we're just seeing choppiness. So that's telling us we are in a chop fest, right, for right now. And if we're looking at the IWM and it's up here at resistance, no, we are at resistance. If it breaks out and goes higher, that could be a really nice sigh of relief for a lot of penny stocks to lift off their bottoms. Or if we get rejected here and start heading back down and we start dropping down lower and lower, that could be a bad sign for a lot of penny stocks, as they'll probably be heading lower unless they have news or they have catalysts upcoming, which we're going to dive deeper into, so you understand that you can still profit off these things in a bear market. If IWM is down, you can still profit. You just have to make sure your due diligence is really honed in and you know what you're playing before you jump on in. So let us use an example for this video, and we're going to use one stock and we're going to just dive through it all. I don't really care what I uncover, if it's good or bad, but we're going to dive through the entire process using one example, one stock. I'm going to go back to FinViz, and guess what? ABEO. It's a stock that actually I feel like I've traded before, and it sounds familiar. It's bottomed out. Chart looks pretty good to me in terms of the risk reward. There's a lot more upside compared to the downside from where we're at right now on a spike, on a news release, maybe something along those lines. So we're going to use ticker symbol ABEO as our example, as our test case, as our guinea pig here in this video. First and foremost, what do? What do they do? Don't be that guy on CNBC that had no idea what the company's doing. Don't be that guy, because we're already playing volatile stocks. We already are. And yes, you could just play the charts, and that's one way to trade, and I have done it myself. I certainly have. Just trading the charts. I don't care about what they do. But get a feel, have an idea, write it down. I don't care if you forget it tomorrow. Write it down so you know the sector, you know what they do, you have a decent idea, because that's going to help us out, and that's ultimately going to make it easier on us later on. So how would you figure that out? On FinViz, they make it easy. You click on their name, and we are on the website, just like that. So within about 10 seconds, we can have an idea of what this company does. Working together to deliver gene and cell therapies for people impacted by serious diseases. Boom, just like that, we got an idea. I don't care. Do we know the details here? We don't need to know too deep into what they do. And I think with penny stocks, there's a blend. There really is. Don't get too caught up in the story and this and that. There's a mix of the charts, there's a mix of playing the game, and there's a mix of understanding the sector and kind of what they do, and some catalysts upcoming and potential that we have here, okay? So this is important because now we have an idea of what they do. If you can't figure it out from the website, or you have no idea what the website says, probably not a good sign because it's a little confusing, but maybe it's a little over your head. A great place to go, number 2, would be seekingalpha.com. So ABEO is our stock. I'll type in the ticker symbol. It's a free site. You don't have to pay for it. And I'll go right here. I will go to the recent press releases. And just like that, there's a recent one from October 13th. Therapeutics announces clinical data presentations at upcoming scientific congresses. So then I can start reading through some recent press releases, and maybe there are details into what they do in these recent press releases, and so I can start to build out a better picture. It's really not that hard, but no one wants to put the extra 5 minutes to do this. Now you're going to get a better feel for the sector, which now you can log this stock on your list of different sectors. Maybe it's biotech, maybe it's healthcare, maybe it's gene therapy. You can really dial in your sectors. You can dial in your list so really, really close so that you have these to come back to when, let's say, another stock starts running and a stock in the same sector is going crazy. These might be good sympathy ideas that you can play off of that, and there's a lot of money to be made there as well. We've gone to the website. We know that works. Make sure the website works, because if the website doesn't work, that's probably a red flag right there. Now we can dive into a little bit deeper into what's going on behind the scenes of this company. So the next place that I would recommend would be tipranks.com if you would like. You don't have, there's free versions and I have a paid version. You don't have to use it, but it's a great place to go to get more information on a stock, for example, like ABEO. Let's pull this up. Generally speaking, they will have price targets from analysts here, if there are any. They will have more information, they will have news, and they will also have what's called crowd wisdom, which is a cool feature. And it will get you, insight into what investors and what traders are doing in terms of this stock. Are they adding it? Are they selling it? And it might give you a good sense for the sentiment. You'll also get access to hedge fund information, or hedge funds buying or selling. If insiders are buying or selling, they'll have that information here on TipRanks. Now, we want to dive a little bit deeper into some earnings reports. So a free site to use, BAM SEC, ABEO. Here we go. Let's pull the stock on up. Now we can go into the financials, and I would highly recommend this. Go to the financials section, which is right here on the top. Go into their recent earnings, their recent financial report, 10Q, and we will be able to see, this is, might be a little tough to read, but just like that, we'll have their latest earnings report. We will currently have their cash. Boom, they will tell us how much cash they have on hand, current assets. They will give us current liabilities, and we can start to compare these numbers. Are they in debt? Do they have cash on hand? How have their earnings been? How have their expenses been? Have they had any revenue? Now, for some of these stocks, they won't have any revenues because they're an emerging growth company. They're currently researching and developing, and eventually the idea is that they reach the end of their trials. They can get a product approved. The FDA can approve a product, and they can start selling that product on the market and making money. That's how kind of a lot of these stocks, or a lot of these biotechs and healthcare stocks, generally work. So you'll get a feel for what's going on here. Are you seeing any outrageous expenses compared to how much cash they have? Are you seeing any outrageous numbers in terms of assets to liabilities? Do they have more assets than liabilities? If not, that could be a red flag. And this is going to get you into a much better place, a much better feel for the financial position of the company, which then leads us into the next piece, which is offering risk. Right now, we can look at this and see an S3 on file under the prospectuses and registrations section. Is there an S3 or an S1 on file? Can the company offer more shares to the public? How do you know? Let's click on the shelf and let's dive into what this is going to mean. So here it is, a total of $250 million worth, okay? Now, okay, we understand that they had a $250 million shelf offering filed, and this was back, let's go back to where this was. This was actually here on the 7th of June, okay? Now we go to let's say finviz.com, and you scroll down and you'll get the whole news release, or you can go to Seeking Alpha, wherever you get your news for these stocks. You scroll down and you go back to that period. Have they done an offering since this shelf was filed? I can do Command F, offering. Ooh, I can just type in offer, and we have not seen an offering anytime recently. So that's telling me that they potentially could do an offering. They could offer more shares to the public, and that, is a potential risk. So now I know there's the opportunity for them to do an offering. Okay, great. When may they do that? They may do that after they have attention on their stock. Could they do it right now? Sure. But there's no one, who's here to buy it? Not many people. It's super low. A lot of these companies, a lot of these penny stocks, what they want to do is they want to get your attention, get your eyes on their stock, pump it up, give us some juicy news, give us something to kind of get hyped about, right? Then drop the offering because they have the demand right there. They know they can do it. Okay, that's what you want to see. So this tells me if I am in this stock and it gets a nice boost, it starts getting some volume, it gets maybe a press release and it pops up, 20, 30, maybe dare I say 50, 100% in one day or 2 days, there's a very high chance that they're probably going to raise capital. And then that also comes back to going back through their financials. Do they have a lot of cash on hand? If they don't, relative to their expenses and their current liabilities, then they may need to pull from that. Now, one more thing I do want to point out before we dive into the social sentiment aspect of doing your due diligence, that's important. Go back to their website. If you want to get more information, if you don't understand, why they have this much in expenses and this much in or you want to get a better feel for what they have, or they haven't updated the public in a press release on a certain trial that they may have had, right? It would not be a terrible idea to go to the investors and media page here of this website and to see if you can get access to an email. See if you can get access to a place to email and contact them. For example, I can go to the contact us page right here, and this might not be a terrible idea. I go to investor relations, and then I can enter my information in, and then I can ask them the questions that I want to ask. And I think it's actually a very smart way to go about it. And I've done it myself before. If you do this, you may not get an answer, but you might get an answer that could give you clues as to, hey, we have an update coming. What does that mean? They're going to pop the stock price up. They drop an update, they drop a press release. It's probably going to get pumped. It's probably going to send the stock price up, depending upon if that's good news or bad news, or if it's just an update. And there's an opportunity there to make a few dollars. Now, I want to go back to the social sentiment side of doing your fundamental analysis. And so what is that? That would be back over onto Twitter. That would be back over onto YouTube, to whatever social media platform you're getting your ideas from. If you type in that stock, for example, if I go in here and I type in the cash tag, let me actually zoom in for you guys. If I type in the cash tag and I go ABEO, the ticker symbol, okay, I type it in, I am going to be able to see what people are talking about, what people are thinking. If I am noticing that there aren't many people talking about this stock, that could be a good sign because it's not found yet. It's quiet. It's not crowded. It's not an overly crowded stock. But if you got your idea from someone who's popular on Twitter or something, good chances that there's a lot of chatter and there's a lot of people in that stock. And why is that important? Because it potentially could lead to irrational traders, and it could lead to sell the news, and it could mean that price is already factored in. That run-up is already factored into that next piece of news that maybe you discovered, or maybe you're kind of looking through their press release and they have an update in their earnings. So they have an update in their press release saying, hey, Q3 of 2020, whatever, we're supposed to release our information on our phase 2 trial of this up-and-coming potential product. So that's something you need to make sure you're paying attention to. Now, determining a risk reward. Now, what some people will do is they'll build out spreadsheets or even kind of different documents that will help them when it comes to identifying these things. So you're logging this stuff down. You're taking notes. Wherever you take notes, You can note how much cash they have, how many, this, how much of this. Maybe even go on to finviz.com, and there's even a section at the bottom of the screen where there's insider buys. It tells you insider buys and sells. So as of right now, we're seeing on ABEO, there's been a lot of insider sells. Now, it doesn't necessarily mean anything, but it also could signal that maybe people they're not as confident in this stock or in their products or in their coming, data launches or data releases. It's important to note, but you can note all of these things and then give yourself a score. That gives you kind of a risk to reward score fundamentally. And then you come to the chart and you start doing your own technical analysis. So here we go. Let's dive into that really quick and let's do our risk reward calculation. So we're looking at this stock right now. We're seeing it. It's down here. Let's say we're going to risk it down to, let's say 75 cents. Okay, ABEO, we're going to risk it down to about 75 cents, which is going to give us, let's say, roughly about a 16% downside. But our first target here is going to be up, let's say right here, where this is at 136, which would be about 50% upside. So now I can start to do my own risk assessment, calculate my risk reward, and then also factor in threat for an offering, any insider buying, did I get a response from the investor relations page, what do they do, are they in a hot sector, and all of these things. Everyone's going to be different in how they want to kind of build out their at least log or build out their standards for how they want to do this. But now you can start to see where you notice this stock I like better because even though it has a worse looking chart risk reward wise, fundamentally it's a lot stronger than this stock. And you can start to build that all out on your own and then enter the trade and then assess your next play, assess your next move. But you've done the due diligence, you have done the work up front, and you are so much more confident in that stock. One other thing to also note, it's kind of a little key here, market cap to cash. So what I like to do is I like to go back through those earnings reports, find out how much cash the stock has, go to their market cap and say, okay, this stock has a $90 million market cap. They have potential products coming up, releases coming up, whatever, which could be substantial if I've done the due diligence and I know, hey, this is a very hot sector. These stocks in this sector, are generally trading a lot higher than this relative market cap for the same products or for a similar product. Now, how much cash do we have? If a stock is trading at the same market cap to cash ratio or level, let's say they have $90 million in cash sitting on their balance sheet as of last earnings report, that is a really good deal because the stock is trading at cash value and they may have potential products. They may have potential, phase 1 trials or phase 2 trials coming up on a possible product, on something that they could sell down the road, which would ultimately raise their value and potentially raise their market cap to above those cash levels. So there you guys have it. That is how I've been doing my due diligence when it comes to penny stocks, and it's a great place to start. If you have other things to add, leave them down below like always, and of course, modify and adapt over time. There's a lot more you can always do. This is a great place to start if you want more videos diving into penny stocks, how to find stocks to buy. Again, there are playlists on this channel. Check them out. There's 2 free stocks down below for Webull, other free stocks linked below, links to tip ranks, and even a technical analysis trading course if you're interested, all down below. Thanks so much for watching. If you got something out of the video, hit the thumbs up button and consider subscribing. We'll see you guys in the next one. Peace.